Insider. I'm Lisa Christensen, online editor at Utah Business Magazine. Last week, as it became clearer and clearer that Donald Trump would win the 2016 presidential election, stock futures plummeted. They recovered by morning, but the financial industry seems to be fluctuating as speculations run rampant about what a Trump presidency could mean for the country's economy. Here to help us shed a little light on some of the more likely scenarios is Dave Pierce of GPS Capital Markets, who previously came on to UB Insider to help us make sense of the Brexit vote earlier this year. Welcome back.
Thanks, Lisa.
So, when the election results started coming in, the S&P 500 dropped 5%, which is considered significant.
It is.
And then it, after President-elect Trump gave his speech in a significantly different tone than a lot of his campaign speeches, it recovered and it has been kind of going up ever since, largely. So how common is this fluctuation in the stock market?
Well, let me kind of back up just a little bit.
Okay.
When the election results were just starting to come out, and it was like 19-8, something like that, it just barely starting to get some the very first states called. I was watching the currency markets really closely, and the one currency pair that I was really watching was the U.S. dollar versus the Mexican peso. What happened early on was all of a sudden the Mexican peso value just plummeted. And as I was watching that, even though everybody was still under the assumption that Hillary Clinton was going to win this election, the currency markets were saying otherwise because the Mexican peso was just getting killed. And it dropped over 20% just that night, even before the election was called. Which is such a dramatic move. We don't see those kind of moves in currency, no less the Mexican peso against the U.S. dollar. The Canadian dollar also was really getting hit. Now, as I was watching those big movements in the currency, I was feeling very confident that Donald Trump had won this election way before anybody had called it, just based off the movement of the currencies, because the currency market was reacting as if Donald Trump was going to win. Now, why were we seeing huge drop in value in the Mexican peso, the huge swings in the S&P and the Dow Jones futures? Let's kind of, one of the things we need to think about is one of the things that investors don't like is uncertainty. And leading up to this election, it was almost a certainty that Hillary Clinton was going to win. Everybody was predicting Hillary was going to win. And there was not a lot of doubt in anyone's mind that that was what was going to happen. And everybody had positioned themselves planning and betting that she was going to win this election. All of a sudden, Donald Trump comes from nowhere in most people's opinions, and he's leading this thing. And the markets did not know what to do. And a lot of the reaction, frankly, I think was kind of a knee-jerk reaction. This is uncertain. We don't know how to handle this. This is really throwing a wrench into what we're doing. What do we do? And what we do is we get out because we don't want to be stuck. And so we saw a lot of people selling pesos, selling equities, because they just didn't know what was going to happen.
Which doesn't help the value of the peso or the equities.
No, and that's, I think, why we saw the big declines in the Dow futures as well as the S&P overnight because of that big uncertainty.
Yeah, so is this something that often happens with presidential elections? Or is this a little more dramatic than most?
As we all know, this was dramatic because usually people who are predicting these things have a pretty good handle on it. And we really know what's going on. If you look at the last election with Obama and Romney, I would say it was a lot tighter race. And the Electoral College was even closer than this race. But the predictions of most of the people came true. And there frankly wasn't nearly the turnout in this as there was in this election. There was not. Obviously, this was much more of a controversial election. There was a lot stronger feelings on both sides. And I think a lot of it was driven by people's unhappiness. There was a lot of dissatisfaction, and a lot of people in the kind of the Midwest area, the people that are working class, that came out to vote in droves that we have not seen before. And a lot of them, I think, went for Donald Trump not because they were Democrats or Republicans. Traditionally, most of these guys are Democrats. They went for him just because he wasn't a politician. And they just were not happy with Washington in general.
I did hear a quote from Senator Mike Lee saying that he felt this election result was a massive vote of no confidence for Washington.
Yeah, I would absolutely agree with that. And it's, if you think about the politicians, I mean, they've got to sit back and think about what are we doing and what have we done? Because as I was going out and talking to people, I talked to, hundreds and thousands of people. We've got a lot of clients. And I'll tell you that just from our experience and the people we talked to, people weren't really voting for Trump and for Hillary Clinton in general. They were voting against one or the other, or voting against everything that they believed in. And that's why, in Utah here, we saw a big percentage of people vote for a third-party candidate. About 20% of the people voted for Evan McMullin. Nobody's ever heard of this guy, and has no political background, but I think it was more of a protest vote than anything.
So in the days since the election, our dollar has obviously strengthened. You were telling me before we started recording that the stock market has been at all-time highs the last few days, and that the dollar is gaining strength. Explain that for me.
Sure. And let me kind of put this into context. We have seen the Dow Jones hit record highs. The U.S. dollar index has gone over 100, which is anything over 100 means the dollar is really strong. And it has strengthened up significantly over the last few months. And then we'd been kind of losing a little bit of strength just around the election time. But since the election, the dollar has been extremely strong against everything except one currency, and that's the British pound, interestingly enough. And I'll get to that in a second.
Okay.
But the couple of things that have been driving the U.S. dollar stronger. Today, Janet Yellen spoke, and the thought is that we're going to have increases in interest rates sooner than later. The increase in that interest rate means there's a little bit more demand for people to invest in the U.S. dollar. So that is what has been driving the U.S. dollar today. But what has been driving it before that? If we look at let's talk Canada and Mexico. I mentioned them a little bit earlier,
right?
And how the dollar has strengthened significantly against them. One of the things that Donald Trump came out immediately and said is he wanted to renegotiate NAFTA, the North American Free Trade Agreement, and it's his opinion that is not as favorable towards the United States as it is towards Mexico and Canada, and because of that, immediately those currencies started to weaken. Interestingly enough, within 24 hours of the election becoming final, both the president of Canada and Mexico had got together with Trump, or called at least, and said that they were willing to renegotiate NAFTA, which is a very quick reaction from a governmental leader to just say, oh, yeah, we're happy to renegotiate. What that tells us is that, well, there's probably something to what Trump's saying, is that they probably realize that they had the better end of the deal, and they still obviously want and need to do business with the United States, the largest trading partner either one of them has. And so they need to make sure that they've got good relations and they've got good trade agreements in place to make it so that the goods will flow back and forth. So that's what's kind of been propping up the dollar against those countries. Everywhere else really has been a result of Donald Trump's reaction since the election. If we remember before the election, very bombastic, very in your face, very over the top in everything that he said. Since the election, that's disappeared. And he's been much more stately, much more reserved with his commentary, and frankly, I think a lot of people look at it and say, where did the other guy go? Because he seemed like a completely different person. And we see that a lot in people once they get elected. The whole campaign tactics and the things they're saying from the campaign standpoint really kind of changed dramatically.
But it seems that this new version of Donald Trump seems to be favorable for the economy. Can you kind of expound on that?
Yeah. Well, the things he's saying now provides more stability, because he's not sounding like somebody who's just going to go out and push a button and start blowing people up. People like that, that was the initial fear is, what the heck is this guy going to do? Now we're seeing somebody who is, one of the first things he came out and said was that he was going to move England up to the very top of the list in negotiating a trade agreement with England and get that done in the first 30 days of his presidency. Conversely, President Obama has said that he was going to put England at the back of the line. They were going to be the last people he was going to negotiate a trade agreement with because he didn't like that they were leaving the EU. That's one of the reasons we've seen the British pound continue being strong against the U.S. dollar is because it is very positive for the UK economy. Things like that where he's talking about going out, negotiating trade agreements and trying to get things done and just move things forward and being involved in the economy, I think it is viewed as much more positive than anyone had expected because he didn't really talk a lot about this kind of stuff pre-election.
You mentioned the British pound has been strengthening, and so has the U.S. dollar. I haven't kept up with the Canadian dollar, but as far as my research has shown, the Mexican peso has not recovered as well as the dollar has.
The Mexican peso has recovered some of its weakness against the dollar, but it's hit some all-time lows. If you're wanting to go on vacation, Mexico's a bargain right now. It's on sale. I recommend everybody to go. So it really is. I mean, it dropped as much as 30% in value within the week. It's recovered some of that, but still, it's 17, 18% cheaper than it was a week ago.
So, what does having lower currency value in neighboring countries do for the U.S. economy or the U.S. dollar?
Yeah. If you think about it, one of the things that Trump's been talking about is there's a lot of car manufacturing that's moved to Mexico and other manufacturing that's moved to Mexico. Well, all of a sudden, today, the products that we're buying that are manufactured in Mexico are 17, 18% cheaper. Okay? So, like I said, if you want to go on vacation, go to Mexico. It's cheap right now. For Americans, buying things from Canada and Mexico are a bargain right now. They are very inexpensive. That makes it so that our dollar goes farther, we can buy more. It also tends to stimulate those economies because as we buy more product, their businesses are doing better and it helps to stimulate their economy. Now, from the U.S. standpoint, having the weak Mexican peso and a weak Canadian dollar, there still might be more businesses apt to move. That being said, what happens with the NAFTA agreement and what happens with if there's going to be more import tariff stuff, we don't know that. That's the concerning part. And part of the reason the Mexican peso is so weak is what happens if all of a sudden Trump says, well, you know what, we're going to add a 50% tariff on anything that comes from Mexico. Well, so all of a sudden the 20% discount doesn't matter anymore because it's now 30% more expensive. So all of a sudden it's going to be harmful to companies in Mexico. And I think that's why we've seen a lot of weakness there. People are concerned that the companies that are in Mexico, they're not going to be as easy to deal with. It's not going to be as easy to transport goods and services back and forth.
So it seems like that's going to be one of those things that companies will wait and see what the new trade agreement looks like before investing.
Yeah, I don't think you're going to see a lot of new investment in the next 6 months until all of this kind of shakes out and we see exactly how it's going to end up.
Yeah. So speaking of Mexico, one of the things that Trump is most known for on the campaign trail is his pledge to deport 11 million undocumented immigrants, which is about 3.5% of the current population. Build the wall, have Mexico pay for it. And now, as you mentioned, since the election, his tone has changed so much, but he is still talking about deporting 2 or 3 million people.
So similar to what President Obama has done.
Right. But just talking about immigrants and even undocumented immigrants, what effect do those immigrants have on the country, and what would having a large deportation like this do to the economy?
Well, I mean, we've already seen that happen over the last few years. I mean, because we've been kind of on that same schedule of deportation. Obama has deported more illegal immigrants than any other president in history. And so the numbers that we're looking at right now are really similar to what has been going on the last few years. So, but what does that do to the economy? That's the real question. The real thing is, are we losing the low end of the labor pool? Because when we typically think about the illegal immigrants from Mexico, not the legal immigrants from Mexico and other countries, but the illegal ones. The reason they come and the reason they can't afford to come here legally is usually financial. They have no money, they have no job prospects, and a lot of them are not what you would call highly skilled labor. They might can do construction, concrete work, things like that. That's kind of typically what we see people doing, or service type industries. So if we lose that end of the labor pool, where are we going to get that? It's got to come from somewhere. And if we do not have the people here in the United States, do we have to start importing people legally to take those jobs? There's been a lot of talk about increasing the availability of things like that. Like if you go up to the ski resorts or the lagoon here in Utah, you will see most of the people who are working in the resorts are from other countries. Why is that? It's because they're less expensive. They can actually bring them here, house them less expensively than they can hire people locally. Isn't that crazy?
That is crazy.
It is. And so that's the thing is, when you think about the low end of the labor pool here in the United States, we're talking high school students, college students working part-time, not necessarily full-time laborers that want to take the entry-level type jobs, the minimum wage type jobs. So companies that require a heavy amount of labor tend to have to look elsewhere. And that's kind of think where we've got a lot of the illegal immigrants have kind of filled those slots.
So that'll be an item of uncertainty that we'll just have to kind of feel out as we go.
Yeah, and that's one of those things that's really hard to track and manage in the economy, because you don't really have unemployment statistics on people that are here illegally, because they don't track them because they are here illegally and they're not paying taxes. They're not paying their employment taxes and things like that. So it's really hard to get a handle on exactly how that's going to impact our economy.
So going back to what you mentioned earlier about NAFTA and about Trump saying he wants to organize a trade deal with Britain, Utah is proud of its exporter economy and trying to grow that sector of its economy. And there have been a number of deals that along the campaign trail, which is again a lot different than what Mr. Trump has been saying now since the election. But on the campaign trail, he was very critical of a lot of them. And to be fair, Hillary Clinton was very critical of, say, the TPP, the Trans-Pacific Partnership as well. So how heavily does Utah rely on trade deals for its economy, and how would changing them impact it for good or bad?
Well, if you look at Utah, our largest exporter is Kennecott. They're exporting, minerals, gold, silver, copper, obviously, the things that they dig out of the ground. That's the largest single exporter in the state. There's always going to be a demand for that. So when we look at our export economy, we really have to take Kennecott out of that, because it's such a big piece, and that is so commodity price driven. So let's look at all of our high tech companies and the people we have that are manufacturing things here. Those companies really, there's a couple things that really can impact them. The currency rates. So a strong dollar makes it more difficult for those people to compete. So we're sitting in a situation where the dollar's expensive, and if people are buying things from the United States, it's going to be expensive for them because their currency just does not go as far. That's one of the things that's going to be impacting our exporters right now. Trade deals, really the question you asked me about. So let's talk about that. On trade deals, it depends is kind of the answer. For instance, let's say Obama comes out and says, you know what, Mexico, we're going to charge you a 30% tariff on anything that comes in. None of this North America free trade agreement. Well, what is Mexico going to do in return? They're going to do the same thing. They're going to say, well, if you're going to do that, we're going to charge you a tariff on stuff coming into our country as well. So all of a sudden, any product that goes out of Utah that's being sent to Mexico or somewhere else is now, again, more expensive. On top of the high value of the dollar, now you've got a tariff that these other countries are going to be charging. It's just going to make it less competitive for U.S. companies. So when you start talking about putting in tariffs and trying to crack down on companies or countries, excuse me, sending product here, that's a dangerous road to go down because as soon as you start doing that, they're going to do that as well, and that's going to stifle your economy. This is my philosophy. I am really more of the free trade line of thinking, in that we trade fairly with them, they trade fairly with us. It makes it easier for us to sell products, and then we've got more money that we can buy their stuff and bring it here. And I think that having more open free trade, it's got to be fair.
Sure.
We hear a lot about China dumping things, and they do that as part of gaining market share. But it needs to be fair trade. But I really believe that free trade, fairly done, is good for the global economy.
And just to back up with what you were saying about the stronger dollar making it harder to trade in some situations, is having a stronger dollar actually harmful to some sectors of the economy?
Sure. Of the U.S. economy, absolutely. Especially if you are talking about a company that has direct competitors in those countries where the U.S. dollar is strengthened against. So, for instance, if you've got, let's say that you've got two companies that manufacture the same product. One of them manufactures in Mexico, one of them manufactures in the United States. And if you're going to the grocery store or wherever you're buying this at, you see them on the shelf right next to each other. And you're like, they're about the same. The products are not really differentiated that much between each other. But all of a sudden, one is 20% less expensive today. Which one are you going to buy?
The 20% less expensive one.
Yeah. If there's no real differentiation, you're going to buy the one that's less expensive. And so that there's that aspect of it. And then if you've got, a number of years ago, I had this example. I was working in California. I had a bunch of clients who were wineries. And they were local, domestic California wineries who sold their wine domestically. All of a sudden, the value of the euro declined dramatically. And all of a sudden, French wine was basically half price because the value of the euro had dropped in half. And so someone would go to the grocery store, and what was a $20 bottle of wine that you could buy from this U.S. winery versus the French winery, it was like, well, maybe I'll buy the French wine because it's got a perceived better value. But it's a toss-up for $20. Well, now if you went into the store and the French wine was 10 and the U.S. wine is 20, which one are you going to buy?
You're going to buy the French wine.
Out all day long.
Yeah.
And so there was these wineries that were going out of business left and right in California because they were no longer competitive. Economically, their business had been ruined, even though they weren't even doing any business outside of the United States.
So a strong dollar is helpful in some instances, but in others it can be very harmful.
Absolutely. Yeah, exactly. A lot of people think, well, if we got a strong dollar, the U.S. economy is strong, and that's great for America. It's not always great for us. Our exporters, it doesn't really help them.
But would it be better for importers?
Oh, yeah. It's cheaper to bring stuff in. And if you're competing against a U.S. company and you're an importer, absolutely, the market is better for you.
Yeah. So it just depends on what side of the deal you're on.
It does. And fortunately for us, we're on both sides because we help both importers and exporters. So volatility is one of those things that is tough for companies. It's good for us because we help people avoid it. So it just really, it does. It depends on which side of the business you're on. So I kind of have to play both sides here because I have good clients that are on, do it both ways.
So obviously there is a lot left up in the air and things are going to be in flux for quite a while longer. But what are some other things that could potentially have substantial impacts on the U.S. economy for good or bad?
Oh, for the country as a whole, we've got all kinds of issues, don't we? If we think about our national debt, it's quite stifling. If you consider how much debt we all have, somewhere in the neighborhood of $500 million per household.
Wow.
I mean, I don't have an extra half.
No.
Excuse me, $500,000. Did I say billion? $500,000 per
I still
household.
don't have $500,000
Yeah,
that I
exactly.
can just.
Exactly. There's not many households that just have an extra $500,000 sitting around that they can just send to the government to pay off our debt. How we pay that off is going to be, just really massive going forward, because a lot of people say, oh, well, we'll just default on it because most of the Chinese and Japanese, they own all our debt. We'll just default on it and not pay it. I've heard people say things like that, but you really can't, because by, as part of our Constitution, the way we're set up, the first thing they have to pay is the debt before they do anything. And then the next thing they pay is, all the obligations like Social Security and Medicare, Medicaid, and things like that. And once you pay off those things right now, there's no money left for building roads and paying for our government and paying for the military. All of just paying the interest on the debt and all of our entitlement programs more than takes up all of the money the government takes in. So, how to solve that problem? I don't know how to do that. I wish I had the answers. I know it's a problem. So that's, I think, that's something that could really impact our future as a country from growing. We talked a little bit about the immigration issue, and there's a lot of talk about increasing legal immigration. And there's good and bad things to that. A lot of the people that come here legally, there's a couple different ways to get here legally. There's there's a lottery, and then there's also a lot of people come because they've got specific skills, and they're able to come in that way. And I know a lot of people have done that. That tends to put a lot more demand on the high level of the economy, the middle to the upper class. And as there's more competition in that area, it's going to be more difficult for people to maintain. But we need those people. We need the people with engineering degrees and computer science degrees. That's where you're getting a lot of those people coming in. So I think that we're in a situation where we're in a shortage. I've got one of my clients, for instance, that set up a developing center in the Philippines where they have computer developers over there writing code for them. The reason was not because they could pay somebody over there $25,000 a year versus $100,000 a year here. It's because in Utah they physically could not find the people that they needed, and they needed an extra 100 people, and they could find 2. Wow. And so there is a lot of demand for people like that. And I mean, at our company, we have a hard time finding coders, and it's not the pay as much as it is physically finding the people. And so finding people that have got the degrees and the knowledge in the high tech end of the sector is really important.
Well, that's something I wish I had known when I was in college.
Yeah, me too. Exactly.
All right. Well, thank you so much for coming in and helping to kind of untangle some of these questions.
It's been a pleasure.
Yeah. And thank you also to Mike Sasich for production help. You can subscribe to our podcast on iTunes and Stitcher, follow us on social media at Utah Business, and subscribe to our newsletter at utahbusiness.com. Thanks for listening.